Hi everyone, this is Geeta and welcome to the Momentum Lab channel. So this is the last video for the year 2024 before we wrap up and come again in front of you in the next year. So as the year is wrapping up, what we thought is it will be a good idea to sort of recap the entire year along with you to see what has happened, what has not happened, what were the milestones, highlights, what are the growth points, learnings, and what have we all achieved together as a family. So we started in April 2024 this year, and this is December, so it's around 8 months right now. And let's get into the video to see what all has happened in this year for us and you together. Firstly, I'd also like to say that we're very, very thankful to all of our subscribers who've been there with us through this journey, who have sort of started supporting us even when we were just 5 or 6 members strong. So thank you once again for being with us and taking us through this incredible journey over this last 1 year. So firstly, just to look at the milestones and highlights. So we have an amazing family of 2,500 subscribers in YouTube as of today, slightly more. And we have also posted 94 videos in different thematics across in the last 8 months. And we also crossed 8,500 views. So that's quite a lot of views. And thank you guys for that and your constant encouragement. With your support, again, we were able to launch memberships on YouTube, and that's a very new feature which is there. If you haven't checked out already, you can go ahead and check out our memberships. We also have around 25 members, and we have been able to create 13 free tools, develop 13 free tools or resources. I've done an in-depth detail about what each of these free resource and tool means, and I'll be linking that in the description or putting it over here on the screen for you to access it easily. The next thing that we have done is that we were able to launch 3 courses. QuantX is where our learning is built in. So we have 3 courses that we've launched this year. So QuantX Primer is a basic level course where you'll be able to create your own portfolio dashboards in Google Sheets. And you can also look at a lot of calculations and tracking of your portfolios, like calculating NAVs, XIRRs, how to understand risk and how to optimize all of these, and your performance benchmarking with respect to whatever parameters that you define. The next one is a QuantX-Builder course. We were able to provide 3 very close quarter learning cohorts, and we also opened up this course currently for everyone. And we had a very interesting time developing this course, the entire team. And this is for the next level from a beginner, that is next level from a primer, where you'll understand momentum investing in detail and also understand a lot of tools that you can use to build your own strategies. There's also introduction of Python in this, and Python for investing, that is, and in the context of momentum investing and building your own personalized strategies. So QuantX-Builder has been one of our key courses for a long time, where we were able to interact with a lot of learners personally and then take their feedback and put it back into the course. Now we've also made another course called QuantX-Strategyzer, a recent course, which is an extension of the QuantX-Builder, where there are higher amounts of quantitative skills required to do this. And the QuantX-Strategyzer largely has backtesting, concepts of backtesting. How do you pre-process your data? How do you process your data? What are the different strategies that are involved in creating? What are the different strategies involved in factor investing? How do you create your own strategies for invest? How do you then backtest the strategies using Python for different kinds of things? Like it could be simple ROC. We have also discussed risk-adjusted returns and all of that. So we have a total of 80 learners so far for all of these courses and 250 watch hours. So this is to sort of help our DIY community to come together to learn and understand how to build their own portfolio strategies and backtest them, etc. So if some of you were with us from the beginning, you'd know that this channel was built to build a public portfolio of momentum stocks, and also to share the knowledge that we have learned so far and that we are continuing to learn. So in the way of research papers, books, etc., and also to sort of see in public how our portfolio is performing. Of course, due to SEBI guidelines, we'll not be able to showcase the performance of our particular momentum portfolio in public anymore. But for one last time, I'll be able to showcase how the portfolio has performed up until today, and that would probably be it. And once again, I'd like to tell all of the viewers that we are not SEBI registered advisors. So this portfolio building, etc., is a attempt to sort of test ourselves. It is not any kind of performance proof or any kind of investment advice. Then we would highly suggest that you speak with your investment or trading advisor and then do according to what they say, and make sure your advisors are SEBI registered. Now, for building the portfolio and momentum strategies, we had a few topics that we dealt with. We dealt with 4 topics on what to invest, how to invest, when to invest, and when to exit. And we've discussed in what to invest, we've discussed how to eliminate the stocks and then pick some of the strongest stocks. Some rules that were taken was selecting the universe, then looking at closing prices based on exponential moving averages. We also looked at the stock beating FD return or the standard rate. Now we also had another rule wherein the stock has to be within a certain distance from its 52-week high, and also have a certain percentage of up days in the last 6 months, and the stocks should also be liquid. So that is why we have taken the stocks in the universe of Nifty 200 when we started trading initially. We kept updating you about how our rules changed and what we wanted to do it, why did we change it, and how did we change it. And the next thing is to pick out the number of stocks. Initially, we took out we've calculated momentum based on 6 months, 3 months, and 1 month. Also, this has changed, and the number of stocks that we used to pick was 15, and that has also changed right now. However, we also discussed with the help of a research paper that investing in 15 to 20 stocks is sort of the ideal number. And we've also looked at when to invest. So when do you enter a market? If you want to enter a market and create your portfolio, it is basically have to satisfy 3 conditions. When the market is an uptrend, and uptrend is defined using the EMAs. And we also looked at how index has to make an all-time high and what this all-time high is. And we also looked at market breadth, how to understand market breadth and see if it's improving. And in this situation, you are able to start your portfolio. Again, all of this is not our personal knowledge. It's based on research and available academic data and from books that are already available in the market. I'll also do a detailed video about research papers and books that you should read. It came as a request from some of our comments, and this video, I will put it up in January. But for now, this is not our own knowledge. It is based on a lot of pre-academic work, which has been researched thoroughly. We also looked at when to exit for 2 different things. One is a stock. When do you exit a stock, and when do you exit your entire portfolio from the market? For the stock, we have kept that, if the price falls from 20% or X% from its 52-week high, again, you have to define this percentage for yourself based on your risk tolerance and your overall portfolio performance, etc. And you can always change this number or adapt this number as your own strategy is coming to fruition or non-fruition. Again, during rebalancing, there was another rule that during rebalancing, if the stock falls below the worst rank, then it has to be exited. But the worst rank for us kept changing from 30 to 35 to 40 to 45, and so on and so forth. So again, it depends on where your portfolio is, how it is performing, and at what part of the strategy you are and how long you want to hold. So it is entirely a personal decision based on your own risk tolerance and appetite. Now, to exit the portfolio, you also needed to see two things, which is how much of your entire portfolio is allocated to equity. Therefore, you'll understand what percentage of loss can you bear, and then what is the maximum pain that you can endure. Now, we have also looked at a few interesting topics on how to choose your universe for a momentum portfolio. Of course, we started with Nifty 200 for different reasons, and think the universes have moved in time as well. There is a research paper we have discussed in this context. It looks at which universes have performed better, and based on a few parameters, 5 parameters to be precise, we were able to see that Nifty mid small cap 400 is a very good risk reward space. And also there were a few understandings that we were able to get that returns do increase as the market cap goes down. That is, when you go from large cap to mid cap to small cap to micro cap, the returns increase. But as returns increase, the risks are very high. And the best risk reward ratio, therefore, was a small mid cap combo of mid small cap 400 over here. And we've also gone on to see the ideal number of stock holdings in a portfolio. Again, this is also based on a particular study, a research study that was conducted. And you can see that across the universes, the number of holdings that look like a good amount is somewhere between 15 to 25. Of course, for the 750 total index, we've also seen 45 come up, but 45 is really a larger number in terms of management. And that's where the concept of how much of your portfolio, how many stocks can you keep regularly checking comes in. So 15 to 20 looks like a number that can be managed, and also that has some academic significance in the number of holdings or ideal number of holdings for your stock portfolio. Again, concentrated portfolios do give you better returns, but the risk is higher because of lack of diversification. And if your universe is becoming larger, that is, if it's including more number of stocks, that is, if it's going to Nifty mid small cap 400 like that, if it's increasing, the larger the universe, the more number of stocks are better. And again, over here also, we've learned that the best risk reward ratio is in the mid small cap combo sort of a universe. Now, we have also seen a very critical aspect about how to cut your losses early and why at all should you cut your losses early. Now, this is a simple calculation that we have put forth in front of you, which you can also do by yourself. And this chart over here is showing you how much of a gain you need to have to recover the losses in the first place. So lesser the losses, lesser gains you will require to recover your losses. As you keep waiting for better times to come and all of that, you will probably lose out a lot of your capital. So this was an important discussion about how to cut your losses early. Now, we've also seen through another research paper that momentum works in India as well. It is again published in 2019, and essentially what we were able to find out is that momentum also works in India. This chart shows the same thing. Momentum is beating the index over a long time, over the longer term. So the data shows from 2011 to 2020. Another important thing that this research talks about, and also something that we believe very deeply, is that time in the market is better than timing the market. That is, the more amount of time you spend in the market is much more better to average all of your returns and the risks over time than just be able to time the market. Now, we've also looked at what happens if buy and hold happens with a momentum strategy, and again through a research paper that was published. And what this paper essentially told us is that less than 3 months are ideal for rebalancing, and buy and hold really does not work, because as you keep buying and holding, one winner and loser portfolios were observed. At the end of 12 months, basically both of them were giving you similar kinds of returns. So ideally, rebalancing is absolutely necessary, and less than 3 months are ideal according to the research paper. But you can also go through the entire paper on your own and see what works for you and what is the time that works for you and how do you want to rebalance. Now, some of the other things that we got a lot of love for, and we got a lot of interest from subscribers are about backtesting. So we had backtested several strategies and showcased the results. We had backtested for different kinds of momentum strategies from different universes, different time periods, for ROC, just rate of change, simple return, and risk adjusted return. We'd also shown for the backtesting results for absolute momentum strategy. We'd also shown how to calculate them. That video is also available. So in case you have missed it, you can go back and check out how you can conduct your own backtesting for an absolute momentum strategy using Google Sheets. We have also seen backtesting for dual momentum. We have seen it for multi-asset categories, portfolios, and all of that. All of these videos are again available, and you can check them out. Now, an interesting turn had come for us when we started introducing Python for us, for all of the viewers. A lot of people were interested in understanding how to automate all of this into Python, in addition to how you can do it in Google Sheets as well. So we've been catering to both these audience on how to create your own strategies, screening, etc., using Google Sheets or manual screeners, and also using Python. So screening stocks for your momentum portfolio using Python was an important a resource for us to build. This is also there in the list of free tools and resources. The code is available for you to access. And we've also had a detailed walkthrough about the momentum screener and the code walkthrough using Python. Now, we've also used a Google app script for doing this. That was also a detailed walkthrough video, which is there in our channel for you to check out. Now, we've also dealt with the concepts like RRG. How do you build a rotational graph, and how do you understand it as such? How do you build it using Python? What are the different codes? How do you visualize the sector rotations or stock rotations? So this is a detailed video. It's also a free resource, which we've discussed in the last video, for you to go and watch or access the tool for free. Now, another important chunk of our videos also came from extending ourselves from momentum as one factor to the entire universe of factors. So we've started looking at how factor investing looks in India. We've looked at momentum, we've looked at low volatility, value, quality, alpha. We've also looked at multi-factor strategies in NSE and what are being offered. How do you actually understand factor investing in India? So we've done a very detailed analysis of the Indian market since 2025 and provided a correlation matrix for these factors and of their alphas. So this particular correlation matrix is of the excess returns since 2008 or the alphas that they have generated. And we have also looked at multi-factor strategies. As I said before, 3 strategies keenly we have looked at. We've looked at a double sort, we have looked at a combination and barbell. In fact, we have done this in combinations. Like we have looked at one factor for all of these strategies. We have looked at multiple factors for some of these strategies, so on and so forth. Now, all of this research on factors and indices resulted in the NSE Index Showdown, where we have done a in-depth analysis about strategy versus sectoral versus thematic versus broad market. So we've looked at these 4 key kinds of indices that exist, and we have looked at how they have performed and given you an index showdown. Even this is a free resource and tool that is available for you as part of the free tools. You can go ahead and access that as well to understand how some of these indices have performed over time and what are the detailed calculations that exist behind these. Coming to the next phase, an important thematic that we have answered in through our videos is the wealth allocation framework. One of the key content that we were able to provide to you after reading through a lot of books and a lot of research papers, but especially for this video, we have used 2 books, and what we are able to understand is that you need 3 sorts of bubbles when you construct your portfolio. There's a quote, there's a satellite 1 and satellite 2. So for example, a satellite 1 can be a DIY momentum strategy, and a satellite 2 can be a multi-factor mutual fund or anything like that. So we've understood what is the importance of a core portfolio, satellite 1 and satellite 2. We've also looked at what sort of returns and risks we are looking at and time frames that we are looking at when we come to such sort of core and satellite portfolios. Again, this is not our own reading of the market or our own suggestion about how you must construct your portfolio, but this is simply a summary of our readings of a few books that were written on portfolio construction and wealth management, and some of the research papers including. Moving on, we have gone on to look at factor rotation and how do we time factors if at all we can using momentum, and we have also looked at how do you diversify your portfolios across different factors. In continuation to the backtesting concept and videos, we have also done a detailed video discussing the concept of Monte Carlo simulation, where basically this particular simulation is in addition to the backtesting, where it sort of provides a balanced outlook on the returns that are being expected. So in backtesting, what happens is we've discussed that you only can see the best case scenario, but it usually is not the case. And Monte Carlo simulation tells you what is the probability or the range in which you can have these returns or risks. Therefore, it sort of prepares you well beforehand about what are the positives that can happen and what are the drawdowns or challenging times that you can see in the markets. So that was about Monte Carlo simulation. We've also looked at an important ratio, the PE ratio, and to see if you can actually predict future returns or not. And even this is based on a lot of research papers. It does not come from our understanding of the market. If you haven't seen that video on PE ratio, I urge all of you to go back and see that video. It's particularly interesting about how do you look at PE ratio and how do you understand future returns. Now, we have provided other 3 different playlists where we were trying to do monthly reviews about these things. One such thing is on small cases. We've seen that unlike mutual funds, small cases do not have a particular tool which is readily available where you can assess one small case with the other or analyze which one is better. So we started with a top 5 momentum-based small cases, but we soon moved on to top 5 factor-based small cases. This is a detailed video that we are trying to provide to you monthly. We've also gone into providing a factor report. Initially, this report started off as a top momentum-based mutual funds sort of a report where we used to analyze momentum-based mutual funds that are available and rank them and provide you the top 5 mutual funds. But later we have extended this to a factor report where we try and understand how different factors have performed both from BSE and NSE and what are the top 5 factors in the short term and long term. We're also providing a list of the top mutual funds and ETFs which are being offered in the top 5 factors. Coming to the next one. Again, there's these free tools that we have generated. As I told you, we have 13 tools that we have built. I've done a detailed video on it. We have Google Sheets in that. There are Python codes and a lot more. The next thing that we have done was a very interesting activity, both for the team here at the back end, and I hope you've also enjoyed it as much. We have conducted a backtesting hackathon where if people who were interested in coming out with their own strategies and backtesting them have participated. So we were also able to get a lot of insights into what sort of strategies that you DIY learners or you DIY investors have been building on your own. So that was a very interesting point for us in this last year. Now, another important series that we have been able to start in the last 3 months is a podcast. So we have an abundance of knowledge in the internet, in the YouTube community, especially people who are building their own investing journeys from the scratch. So we have brought such people at different levels. So we have brought individual investors and institutional investors as well. So we have featured Abhijit from Investing Fool. We had Viraj from Momo India, and we also had Mr. Anish Teli from QED Capital. All of these were scintillating discussions. I hope we were able to cover some interesting topics for you, and we plan to keep continuing the series in January as well. Now, we were also able to provide 2 free webinars. One was on screening your stocks using Python. The next one is on building an RRG plot using Python. So basically, these were walkthrough webinars. They were conducted for free, and we hope to conduct some more in the coming year. In terms of learning and growth, which is sort of the last thing that I wanted to address for this video, I wanted to tell you what we had learned, what we have, what plans we have for the future. So one of the things that we are building that you're also aware of is a backtesting tool for DIY investors. So we're trying to bring in a small tool which all the DIY investors can use. So with this tool, we are able to bring in some key metrics and performance associated with different strategies that one might want to build. So with this, we want to give you a tool which you can access and where you can easily drop down and understand what are the key performance metrics and what are the other drawdowns look like, what are the range of returns and risks look like, and here you can also build your strategy and backtest it. And at the second level, we are also looking at a few key institutional collaborations from Momentum Lab, and of course that's a topic for another time, and we will definitely discuss about what's happening at our end as and when things fruition. But for at the moment, it's a sneak peek that we do have some institutional collaborations coming up. Now, last but not the least, we have also successfully been able to get a mutual fund advisory license. And under the umbrella of Asset Lab, we have started providing mutual fund advisory. So a lot of people have also approached us wherein, they do want to DIY their own portfolios, but sometimes due to a lot of reasons, it's not possible. So we have gotten the license for providing mutual fund advisory, and Asset Lab is the brand under which we are doing that. I will link an email to Asset Lab in the description as well. In case you're interested and just want to casually reach out, we would be happy to help. And that's it for this year. I hope 2025 would be an even better year for all of us as a team. And one of the best parts, in fact, for all of us was to connect with all of you. So we had a lot of people interacting with us through the comments, and a lot of them were thought-provoking questions as well. So this community is truly a community where we have interactions, and we were able to learn from you and also give back, I hope. And looking ahead, 2025, we'll try to make it even better. And we'd love to hear your thoughts, and please tell us how it has been for you with Momentum Lab in the last 1 year, if you've been with us for all the time, or just let us know how it has been in whatever time frame that you've been associated with us. Thank you once again for making this journey very, very unforgettable. Here's to a fantastic 2025, guys. Please do not forget to subscribe if you have not already, and Happy New Year to you from all of us. Thank you.